Hello, I'm Donald Leggett, and welcome to the latest London South East CEO interview. AIM-listed Zephyr Energy have just announced a placing to raise £10 million before expenses. The placing fully funds the $3.5 million state 16-2 lateral appraisal well, which is the next step in the targeting of oil production from the Paradox Basin in the Rockies. It also raises a further £6 million conditional on shareholder approval, which will be used to buy and fund new oil-producing assets in the Bakken Formation in North Dakota. Colin Harrington is the CEO at Zephyr. He joins me today. Welcome, Colin.
Thank you, Donald. Good morning and good afternoon, I guess I should say. Nice to see you.
It's been a mighty big day or three for you, Colin.
It has. We couldn't be more excited. It's been a transformational time for the company. With these two things together, the combination of both the drilling of the lateral and the acquisition, we think we've got a platform that can grow significantly on its own resources without having to raise more capital. And we are just thrilled to be in this position and anxious to get moving on it.
Let's take you through the assets first and the funding second, if we may.
Sure.
What exactly did you buy in North Dakota, and why was it an unmissable opportunity from your perspective?
Yeah, North Dakota is fascinating from my perspective. We are buying 5 wellbore interests. These are non-operated interests alongside a very good operator in the Bakken Formation, one of the most active operators there. So all 5 wells have been drilled. 1 is already online and producing, and the other 4 are drilled but not yet completed. They're about to be completed in May. So from my standpoint, we've been able to step into a position where the seller has not funded any of its capital expenditures so far. They haven't funded anything towards the drilling of these wells. And we can step in and take over these interests, pay the historical CAPEX on them, and then benefit from the upside in the production as it comes on. So in terms of an acquisition, exceedingly low price per barrel of oil, proved barrel of oil. It's under $1 to acquire these proves. And significant cash flow that already exists with them and will certainly be coming on more starting in July when after the wells are completed and they're online. So hard to step into something that, hard to find something where the wells are drilled, all the drilling risk is out, and we understand the capital cost completely and can project forward exceptional returns here.
So I understood that you looked at 75 different prospects, and this was the winner. So how long will it take to actually earn back the cost of the purchase, which was around £6 million, I understand?
Yeah, so actually in total, you have $8 million that we're spending. The majority of that is on CAPEX. Less than 5% is the acquisition price. We believe we'll have all $8 million back in year 1. Overall, this throws off on a 2P basis, cash-on-cash IRRs of about 47%. So again, stepping into drilled wells, and getting a 47% type return is an exceptional return in this environment. We negotiated the deal when the oil price was much lower. We've had to work through a number of things to get it over the line, but we're very, very thrilled to be closing on it shortly here. And we think in terms of what this will do for the company, it gives us a real cash flow engine over the next few years in which we can invest, take these wonderful proceeds and begin reinvesting into our Paradox project.
To what extent was this a distressed sale, and does the seller retain an interest?
So no, the seller doesn't retain an interest. The seller has not funded any of the capital so far. So, in the sense that these are assets that could have been foreclosed upon, I think we're giving a nice exit for the seller. We're certainly providing the benefit to the operator because the bills that have been outstanding will be paid. But when you look at the landscape across the whole in the U.S., it's really an exceptional time right now because commodity prices have shown strength. We're back at $60 oil, and yet a lot of the small players in the U.S. are completely short of capital or are still in bankruptcy. So it's a very attractive time to be looking for transactions. And as you pointed out before, we've looked at a huge number. This one fit the bill and really stood out to us. But there still is a lot of distress across the U.S. landscape. The money that is coming back into the sector tends to be going to the much bigger, larger operators such as Whiting. So it's a good time to be in our shoes, to have capital and to be looking for deals going forward.
You're going to be very busy. To what degree will your small management be able to cope with such a workflow in the next 6 to 9 months?
Well, it's interesting. These assets that we're buying are non-operated. So in terms of management resources, this isn't something that will take a lot of our technical team's time. really all of our, the majority of our time is going to be spent on the Paradox development. And if there are other opportunistic acquisitions that pop up, we'll certainly take a look. But really, my focus right now is getting the cash flows and getting the Bakken project in under our belt, and then turning to the Paradox and really spending our time carefully and responsibly developing that out.
Okay, you're responsibly developing the Paradox. To what extent has that lateral well already been de-risked, do you think, Colin?
Oh, absolutely. I mean, this is what we've spent the last year delivering, is trying to take a Paradox position, hone it from a land perspective, get the leases and the structure in good shape, which we've delivered. Then we went out and we had that novel $2 million grant funding from the U.S. government, which helped us drill a vertical well in December. That vertical well allowed us to get continuous core from our primary reservoir, which is the Cane Creek Reservoir, and it allowed us to get logs up and down those reservoirs, and also some additional cores in higher zones. So we have now been able to combine very, very high quality 3D seismic shoot with actual core rock from our, underneath our leaseholding position, combine that with the logs, and it shows us that we've got oil saturations up and down our primary reservoir, that we've got logs that look exactly like they do to the field just to the south, which has been very productive. The 3D shows great natural targets to go after. And because we received this $2 million grant and we're using that same wellbore over and over this time, over again, we're able to de-risk it from a capital standpoint as well. It'll cost $2 million less than it would have otherwise. So we financially de-risked it, we've technically de-risked it, we've de-risked it from a commercial end. And already here, hit rates were relatively good with horizontal wells historically in this basin going after the natural fracture. They were hitting 6 or 7 out of 8 times. And we think, with the benefit of new rigs, modern seismic, all the data we have, that we'll be able to do better than that. So I'm confident we have done everything in our power to tee this up in a proper way. We've done it slowly and carefully, but now is exactly the right time to do it.
Okay, so how much money do you think the North Dakota wells will be throwing off by the end of the year, say? And how much does a standard well cost to drill in the Paradox? Is it possible to put those two together?
Sure, and we've, as you can imagine, we've spent a lot of time doing that. We've spent a lot of time modeling this out.
I bet you have.
North Dakota will be throwing off in the second half of this year about 720 barrels a day. And so that's a lot of cash. Over the next year, it'll throw off $8 million of cash. We'll have payback in 1 year. Future wells in the Paradox, net to our position, we own 75% of that, will be $4 million each. So you can start to do the math and see, we'll have the ability to drill a few more wells, all without using leverage, without, using any debt anywhere, and really just being conservative. But we think, beyond this first well that we're already funded for, that easily gives us 2 more wells and plenty in the future as well. So we can see, when you combine that with the potential of a hit, and wells in the Paradox, when you hit natural fractures, they flow pretty dramatically. Our forecast is 780 barrels a day on a 2C basis of initial production. Wells in this area have done that pretty credibly. So all in all, if we do this right, we have substantial cash flow over the next year and a lot of capital to redeploy and grow this on our own pace in our own way. And we think we have the team and the means to do it now.
Okay, very briefly, let me take you back to the fundraise, please, Colin. Who participated in the share placing and at what price, and why were you pleased with that?
Yeah, I was exceptionally pleased with it. It was a 10 million pound raise. Our brokers, Turner Pope, did a great job for us. They kept a very, very tight process. So we cornerstoned with a number of very good institutions. I'm thrilled to see institutional support coming in. We've had some to date, but we've got much more now. The board participated, a lot of our affiliates participated, and we, I think, kept a very tight process. The one downside, and I get to communicate with a lot of our retail investors, they weren't given, people who weren't Turner Pope clients weren't given the opportunity to participate in the same way, but I'm gratified to see a lot of the support in the market afterwards. We did the deal at 2p, so we raised the money at 2p, which was the closing bid price on Friday. and it was a 2.5% discount to the last trade. So tiny discount, and the shares have responded really well since. I think it's kind of clear at this point we've taken away all funding risk from this company. And I'm just excited to welcome our new shareholders and to see a lot of our existing shareholders come in as well.
Why should shareholders continue on that journey with you? Why should new shareholders come in, Colin?
Well, I think we've proven to be a team that will set targets and deliver upon them. We're conservative in what we say, and we meet those targets. B, you have a management team here that's put in almost 1.8 million of their own capital now, $1.8 million. C, there's a lot that's happening in the next few months here. So we, if you don't mind me walking into that for a minute.
Why don't you take me through bit by bit? Do Bakken first, and then
Sure.
do Crane Creek. So we'll do it as two separate questions. Bakken, please, Colin.
Okay, so on the Bakken, the next news flow will be the official closing of the acquisition, and then we will be an immediate oil producer after that point. And once we resolve our final, we'll be taking this over, final documentation, and we'll be setting up on the operator system. So we'll begin getting revenue checks in April from that asset. Beyond that, the 4 remaining wells that need to be completed will be completed. The target is May. So they will be coming online. We'll get initial production rates and get a good sense of where those volumes are. We already have a great idea because there are 3,000 wells that have been drilled in the area around us. So we have a very good sense of what these reserves look like. But really, that's the primary news from the Bakken is deal closing and then wells coming online, and that begins the cash flow engine. So
okay, final question to Colin. What comes next at Crane Creek then?
Yep. So at Cane Creek, we will be, there's a lot that's happening there as well, obviously. We're preparing to drill the well right now. So we have, all the basic things like landing the rig contract, final permits, preparations, although we are using the same site that we used before in the same pad and the same roads, which really helps on the cost front. But all the work that goes up to a early July spud, and we will be spudding that well at that point. This is a quicker drill time because we're already down at 6,400 feet, and we'll be drilling out from there. So a lot of excitement just with the Cane Creek well. And at the same time, I think, as you might remember, we have the data from all of the overlying reservoirs. There are 11 overlying reservoirs above the Cane Creek, where we have logs and core data. We saw good drilling gas shows as we drilled through them. And we are doing the work now to figure out what kind of exploration targets we might have in those zones. These were not historically produced zones. It's always been the Cane Creek in our area that's been produced. But we've undertaken very detailed analysis to look at other upside potential, and we'll be releasing that sometime in the next 3 months as well. So a lot of news flow compacted into the second quarter here. And then from that point, we hope to be on production in the Paradox and be on production in the Bakken and off to the races to start to unlock the remaining value here.
Okay, Colin, I look forward to you coming back and updating us as and when you've got some news from Cane Creek. Fantastic. It's been a pleasure to catch up with you as always. For more interviews like this one, please subscribe to the London Southeast YouTube channel and do follow us on Twitter. That's @London Southeast. Thanks for watching and stay safe.